Now, of course, moving on to the Nigerian markets, is escalating political tensions between Syria and the West is biting harder into emerging markets, with the U.S. Treasury debt prices, oil prices and safe haven currencies all climbing as expectations of military intervention in the war-torn country grows. Now, the question is, how is this impacting on emerging markets trades, and of course with a focus on Nigeria? I'm now being joined by Abdul Garba, equity research analyst at Don Lauren Merrifield. Thank you so much, Abdul, for joining us.
Thank you.
Well, let's quickly start with general market performance midweek trade. We're looking at the Osha index still trading sideways, so far down by about marginally by 0.05%. We're looking at some top losers, among them, or prominent among them, banks. So just give us your sense of what we can expect going forward for today's trade.
Well, we could expect a gradual drift to continue. This gradual drift has been going on for about 3 days. It's a cycle representative of the investing spirit all over the world, which is sort of dull, and coming post-announcements and post-announcements of earnings, post whatever effect that could basically support the market for a while. Large capitalization companies had announced all of that. So all of that impact has been coming to the index and is diffusing off.
Well, let's quickly talk about the biggest market news right now. Dangote Flour Mills results second quarter disappointing numbers. Some might say revenue up marginally by 1.7%. We're looking at a very strong loss for the company, loss after tax of 2.3 billion and loss per share at 1.07 kobo. What can we read from these numbers?
Yeah, well, Dangote does feature two things, two aspects to the tax side. It has a deferred tax liability and a deferred tax asset. So we're likely to see some netting off, or counter effects over the next few periods. It must be to do with certain things on accounting principles. Okay, but we have the largest contribution to the losses actually coming from tax.
Okay, with that, does this mean that we might see of course, you changing your outlook for the stock going forward? We know it has been stuck somewhere around 9.50 kobo. And tell us about, of course, some plans by the company to divest.
Okay, first of all, we go through developments that have been happening. Dangote Flour is a well-traded stock on the exchange up until the announcement of a significant stake, over 60% taken up by Tiger Brands SA. Tiger Brands also added to its portfolio UACN Foods, which is largely which could buy up significant volumes from Dangote Foods. Dangote Flour as it mills, and then sell it as its own product, basically getting raw material from Dangote Flour and then selling down the chain. So that play is supposed to mean something to Tiger Brands, but as that translates to the owners or shareholders essentially of Dangote on the overall, we were waiting to see what Tiger Brands product play is going to be in this market, and how that could transmit to numbers to Dangote Flour.
Okay, let's quickly talk about some events outside of our markets. Of course, emerging markets. We're looking at Syrian tensions escalating. Yesterday, we heard on the news that the U.S., France, and UK within the next 48 hours could actually commence an missile strike on a Syrian military assets. Now, we're looking at emerging markets reacting negatively to that. And remember that they actually have been down for about 3 months now on the back of the imminent quantitative tapering by the U.S. Fed. Now, for foreign portfolio investors trading at the Nigerian market, how do you think this could change things for them? Do you think they might have to rebalance their portfolio? Could we see them selling off? Okay,
first of all, I think it would be better off just explaining the mechanics of the risk. The risk of faced by investors basically in this market, given these announcements. To the dimension that it affects the way we are assessed as a frontier market, not an emerging one. Frontier market being a class of markets that are more remote than the emerging markets, for which you have Brazil, China, Russia, and India. How that impacts us is how the money flows, essentially. If there's more faith domestically that some sort of spending is going to be directed, from the sense of which I get, that sense of spending in the absence of stimulus of every sort, means warfare essentially means more money is being spent. So that would be sort of expansionary, and that could bring in faith to migrations backward, back to the US and Eurozone again, if this were to be taken seriously. So given that, yes, emerging markets will face the risk of money being withdrawn, and frontier markets, the riskier bit of emerging markets, could actually suffer. But over the short run, from observations, we don't see any strong connect between these developments and what's going on now.